Brian, when it comes to life insurance, I've heard that there are two different types. There's permanent life insurance, but there's also this thing called term life insurance. Let's start with term life insurance. What is that?
Yeah, term life insurance is the cleanest form of life insurance. It means you pay into it for a period of time called a term of time. And if you die during that time period, there's a payout. And at the end of that term, the policy will lapse, and there's no ability to get paid unless you extend it, and they probably would raise the rates on you at that point. But term life insurance is strictly just plain old life insurance, no real bells and whistles to that. And again, it's for a period of time. So if you have it for that period of time, and I mentioned it lapse, then you paid a lot of money into it and you don't have any benefit after that period. But of course, if you passed away during that period. So a lot of young parents might go with term life insurance. The reason they would go with it often is because it's cheap. It's the cheapest form of life insurance.
So with term life insurance, like you said, you can buy it for a term. It may be 10, 15, it could be 20 years. And the advantage is that it is inexpensive. But again, it's nothing but a death benefit. So let's talk about the alternative, and that is a permanent life insurance policy.
Yeah, permanent life insurance is more expensive, but it has other bells and whistles. So the term permanent means if you buy the right one, it has the right underlying investments, it can create an asset for you and your estate later on. It will be around. Once you apply for one and you're covered, then they can't take that away. It's permanent as long as you keep making your payments into it and the underlying investments do what they're supposed to do. Then that policy will be there. Now there's some other benefits. There is the life insurance aspect that will be around even after a period of time has passed. So you want to have this permanent, it can be around for as long as you are. There's also the ability to take cash flow out of it in your retirement, income tax free, if you built up the cash value for long enough. A lot of people buy term insurance policies not necessarily for the life insurance benefit. They buy it for the tax-free nature of life insurance, where they're going to borrow against their own future death proceeds someday, supplement their retirement income tax free, by having their term or their permanent insurance policy. So both have their uses. As I mentioned, if you don't have a lot of extra money, you have small kids, probably start with a term policy. I know I did way back when, and then eventually I got a permanent insurance policy that I plan on using for my own cash flow tax-free in my retirement.
Can a term policy be converted to a permanent policy?
Generally not. Maybe an insurance company might have something, but you see, a term policy doesn't have any cash value to it. It really doesn't. So I would say unlikely. There is something called premium finance when you get permanent insurance policies, where you can elevate your amount of coverage and elevate your potential for cash flow down the road for those people that have higher income and higher net worth. It's kind of like leveraging into real estate. You can leverage into life insurance and take advantage of the advantageous income tax laws.
Is there a strategy where you may want both permanent and term insurance?
Yeah, there absolutely is. As I mentioned, I did that myself. When I couldn't afford it, I got the term. When I could afford it, I got the other. I also had a situation once. Husband and wife came in. They had a term insurance policy for millions of dollars for years and years. They were in their early 50s, and they were told they needed to get a new policy. So they came in thinking they were going to buy a term insurance policy. But he realized, boy, I spent so much money on that other policy, now it's not worth anything. And I said, well, would you rather put money into something that will be worth something and that you could pull cash flow out? And he and his wife had differing views on that. I remember he wanted to leave money for the kids. She wanted to have money to spend tax-free. And so we did two policies, one for the kids, one for cash flow that was tax-free, using the premium finance, permanent insurance. And so now they felt a lot better that their premiums were going to reward them and their heirs later on, rather than just disappear like they did with that old term policy.
And Brian, I've seen these commercials that say you can get insurance for as little as $1 a day. I mean, age really does affect the premium, doesn't it?
Oh yeah, I'm sure a little Gerber baby, commercials, and you can buy pretty cheap insurance. I certainly don't work in that world very much at all, or not at all, in fact. But age matters and generally, again, there'd be term policies. So if you're covering a kid for 30 years, well, that's pretty much wasted money. You're probably not going to have anything come out of that. And especially if you're paying $1, you're not going to get a whole lot of insurance.
Brian, thanks for telling us more about the difference between term and permanent life insurance.